We saw major sell-off happening in Tata Motors after the company guides their JLR division to report a negative EBIT margin in Q2 of FY21 and also expect the chip shortage issue to worsen in Q2 from what the company experienced in Q1. This time, the company also highlighted that the demand is really intact. They are witnessing good demand, and even in Q1, they witnessed really good growth in their retail and wholesales volume. In Q1, JLR retail sales were up 68% on the YoY basis, and the wholesale sales excluding China JV were up 73%. But the chip shortage could potentially result into 50% lower wholesale volume than what the company planned for in the coming times ahead, and hence it expects a negative free cash flow of £1 billion in Q1 and in Q2, and also expect to report negative EBIT margin in Q2 of FY22. On all of these updates, we saw Tata Motors stock down 9%, but now let's see what the Brokerages has to say. Yes, Brokerages do find this as negative. The update is really negative, but that is persistent, especially in the short-term period. But they have not made any changes as of now to their target price and rating either on what the updates they got from the company. Firstly, let's take from Jefferies. So Jefferies on Tata Motors, they say that the chip shortage won't last forever and the turnaround drivers for the company are still intact. Tata Motors, yes, definitely has provided very weak guidance for their JLR for the first half of FY22, and they expect chip shortage to take a big toll on the wholesale volumes. They also drive negative EBIT margin and cash outflow of £1 billion per quarter. On account of this, they have made a cut on their estimates. They have cut FY22 EBITDA estimate by 10% and EPS estimate for FY22 has been cut by 44%. But FY23 earnings are broadly unchanged as of now, and Jefferies also note that despite the near-term pressure, they do believe that Tata Motors is poised to deliver a strong turnaround, and they do maintain their buy rating on the stock with the target price of 435. So that's intact for them. Now let's take a note from Nomura. Nomura have maintained their neutral rating on the stock with the target price of 353 unchanged. As per them, the chip shortage puts FY22 JLR volumes at risk. The EBIT to remain negative in the first half of FY22, and given the negative free cash flow to be reported by the company, they see their FY22 debt assumptions might have an upside risk. Now let's talk about what Motilal Oswal has to say. They see that the supply chain related disruption in the first half would substantially impact their JLR volumes and earnings in the first half of FY22. However, FY23 should see a negative material impact of the supply side disruptions. On account of this, the updates from the company, they do lower their FY22 consolidated EPS estimate by 40%, but largely leave unchanged their FY23 estimates as of now. While there would have been no near-term catalyst for the JLR business for their take on the company, the India business, that is 50% of their SOTP, would see a continued recovery. So not only they are commenting on the JLR division, that's a negative update, but the India business is poised for a strong growth. Motilal Oswal do maintain their buy rating with a target price of 400. So that was the Brokerages take on Tata Motors. Do keep a look on the stock.